No, but his point was just how stupid he looked, and he's like, he doesn't mind looking stupid or any of those sorts of things.
A good trait for being an investor.
Yeah, and related to that, yeah.
Weird. What did Monish say? Have you gotten to that part yet?
Yeah, I read his. They go to India together and look at the foundation stuff and things that he does, but it's that and him talking about things, talking about the meeting with Buffett and those sorts of things.
Dinner.
Yeah. I mean, it's all stuff you've heard before, but it's just slightly different context,
Interesting. Well, the mics are hot right now. So what's this book we're talking about?
I don't remember the name of it. You got to look it up on Amazon because it just came out. So
let's see. So Jeff's talking about a new book that he just downloaded yesterday at midnight. This is a book I actually recently out, Present Future, Business, Science, and the Deep Tech Revolution. I just downloaded that yesterday too. Is it Michael Green, you said?
No, is it William Green? What's his name? Let's see how close I got to his name. No, that's not. No E. Try that.
Oh, yeah. There we go.
So there we go.
Richer, wiser, happier.
Yeah. There it is.
Yeah, that is. Yeah, I've seen this on Twitter.
Amazon drives me crazy that now some things are sponsored that aren't relevant to your content. You know that?
Yeah.
Do you ever? I don't know to look away from it sometimes. So I'm like, oh, why can't I find what I searched for? It knows what I searched for. It just wants to do an ad. Yeah.
Exactly. So yeah, you download on your Kindle. So Jeff said that he's started reading this book at midnight last night and he enjoys it so far.
Richer, it's everything wiser, happier. So you can look at the table of contents maybe. So maybe it lists I don't know if it does, but I hope it lists if you scroll down, hopefully it lists
maybe
investors. Nope. Doesn't
scroll up.
Yeah. Okay. It's just praise. All right. Well, their profiles of different investors. I know there's Templeton, there's Pabrai. And like I said, it's kind of like him. What you get is sort of like as if it's the behind the scenes of someone doing a magazine profile. So these are basically people he probably profiled for magazines. But what I was saying is it's slightly different because the way that he writes it is more like if you ever read those magazine articles where they talk about going to the person's office or house or whatever, what it looks like, the behind the scenes of it and stuff, not just taking out their quotes, So this is normally, which would be condensed down into some article probably for Forbes or Fortune.
I recognize this guy. This guy did another book on investors. Yeah, The Great Minds of Investing. This is like a great table book.
Which I don't have, right? Because it's not on Kindle.
Yeah, I don't either.
For all I know, this could be like the exact same content, right? Because I've never read The Great Minds of Investing.
I know like Bill Ackman was profiled in this book.
Okay.
And this came out couple years ago, probably more than that,
it's
5
UK,
years ago.
Because the author's UK, right?
There's a problem with your Prime membership payment method. But yeah, look, it's Howard Marks.
They're foreclosing on us. Our partner should be listening to this. Yeah.
Howard Marks. Yeah. Mario
So
Capelli.
I like those sorts of things, those profile things. Like I said, actually, I'm a big fan of books like The Money Masters and all those things. Because then once you find some things about it, you learn about it.
Yeah.
A particular investor, then you can go and find the specific stuff about them, like the bigger books about them or the other content that there is. So it's a good way to find out about a lot of different ones.
Interesting. Yeah. So I got to read that book.
And it's available on Kindle in like a normal price and stuff, right?
Yeah, it's $14.
Yeah.
Perfect. So check out that book. It's a new investing book. Welcome. This is our free form podcast. So we're just free forming it. If this is the first time you're tuning in, hit that subscribe button. Follow me on Twitter. Check out all the content that we provide. Email me questions in this content form. We answer questions from listeners. It tends to be a little bit less structured. Just kind of let our curiosity drive the podcast and answering questions from our listeners. It's a lot of fun. You can email me info@Focus Compounding or follow me on Twitter @Focus Compound and DM me any questions that you have. So Jeff was just talking about a book, like I said, and we like to talk about books in this podcast segment, just to really go through, what we're going through, what we're currently seeing, what we're currently working on, and just stuff that's on our mind, right? A lot of the episodes that we do are more timeless things. So this is fun to talk about more timely things. And what better to go over for something that's timely than there's a single New Jersey Deli doing 35,000 in sales. Focus Compounding is doing more than that. Valued at 100 million in the stock market. Should we go public? That's what I really wanted to know.
Yeah.
I think we should. This is the time to do it.
Well, we just need a what do we need for this one? Is it a Chinese one, or is this I'm thinking of something else?
This is literally a deli in New Jersey.
Yeah, there's a suspicious shareholder situation, though, right? Let me see.
Well, yeah, it's like a gym teacher and it's teachers that own or something.
That part I know, but if you look at the 10K, oh, here we go. They might tell us who owns the shares and stuff. Nope.
Let's see. So the company sold 2.5 million shares last year and has about 60 total shareholders, according to a filing. Hometown reported more than 600,000 expenses last year, up from about 154,000 in 2019. The company also reported a net cash gain of 2.2 million from financing activities, such as selling stocks. That's profitable business, Jeff. Let's see. Einhorn's highlighting of Hometown comes as politicians, regulators, and high-profile investors have publicly fretted about the boom in certain type of stocks over the past year. Let's see.
So it's like a shell type thing. I don't know what it is here, but what I read mentioned a connection to someone.
Here you go. The largest shareholder is also the CEO, CFO, treasurer, and a director who also happens to be the wrestling coach of the high school next door to the deli. The pastrami must be amazing, Einhorn said.
Yeah.
Yeah, I don't see anything about any sort of weird.
No, then maybe I read a different article about it. People are probably reading this in all sorts of different places because it was Einhorn that singled it out, right? So so this kind of thing gets, because of that, media things read it, and so now they look it up and they see this. But there are different companies like this. People sometimes talk to me about a company and it doesn't make any sense, and then I'll look it up and we see what the connection is.
So it's been falling a little bit, 83 million. It was 100 million when he wrote about it. Let's get a balance sheet.
They're all going to be basically zero.
Yeah.
Yeah. So
that's crazy, isn't it?
How are the companies even public that way? Yeah. But that's the problem, because then you can create sort of shells for things by having public companies that are that small when there's no substance to them.
I mean, that's if that's not .com, like, I don't know what is.
Yeah, there's different rules that so this wouldn't meet the rules to get exempted from it. And I mean, my own view is the SEC shouldn't allow trading in any of those things that can't meet those requirements. But basically the requirements are like, you have to either have some meaningful amount of assets, or you have to have turned a profit, or you have to, so some way to prove that this isn't just 100% a shell, right? We understand that people sometimes want to speculate on things like early days of Tesla, they're losing money and stuff, but it's a big enterprise. It's a real thing. And so you want things that don't make money to go public, but you don't want things that don't have assets and don't have earnings and stuff to be out there, because then they're just pieces of paper that will eventually merge with other things or be used as currency to manipulate stuff, or, just any of that.
It's been a 10-bagger. What do we talk about doing 10-baggers and focusing on all these other things? October 25th, 2019 was $1.25 per share. Now it's $10.77.
Yeah.
Wild.
It's not good for whoever that Einhorn mentioned it.
No, I mean, even as a microcap at $10 million, what's that? It's overvalued at $10 million.
Yeah.
At 35,000 sales and nothing else.
Yeah. So obviously with the SPAC things and all that, there's lots of strange stuff going on with companies, and he singled that out. I try never to mention companies like that have strange things going on there.
It's just so weird.
Get requests from a lot of people a lot of times, and I'm like, there seems like some sort of fraudulent thing or whatever. Sure.
It's odd. I mean, even you look at, not to single anybody out, but like taking advantage of the times or whatever. So I think, and I'm going to butcher the numbers, but Mark Cuban sold broadcast.com to Yahoo for whatever it was, $2.4 billion. And I remember I looked up to see how much revenue they were doing. And I mean, clearly they benefited from the times. And I believe
he did a hedge on it, right?
He did. So that was the part that was interesting. He knew that it was a bunch of BS, right? Where he said that he went around and told like old employees, everything like that too.
Sometimes you're not allowed to hedge
is that more of a modern thing?
It's more of a,
I thought that was a newer rule. I'm not sure though.
I don't know that there's a rule. There is a rule about it?
I thought if you're like an executive at a I don't know.
I know that in some cases there were people who were specifically asked, even during that same time period, late 90s, for instance, I can think of a couple people who were specifically asked not to hedge. The ones I'm thinking of were a lot more famous though. Mark Cuban's famous now. So they were selling out a business and joining the board, and it was asked that they not hedge it. So many companies, if you read their proxy statements, do require, it's interesting, I'd say most public companies you read about who are on an exchange do require that their directors and executives who own shares in the company not hedge the shares or use derivatives to have the effect of hedging it. but they do allow them to pledge the shares. And some of them don't have like any sort of things with that. And actually, but if anything, pledging shares has been a big problem. But yeah, in the 1920s and stuff, people shorted their own stock, so that's always been a concern. But that's why you have the insider trading stuff.
Mm-hmm.
So, I mean, if someone was hedging, you could see, well, I guess you couldn't see derivative stuff.
So this is broadcast.
Yeah.
1998, total revenues, $22 million. Obviously burning a ton of cash. I mean, type of business they were doing, and just, burning about $11.5 million in cash. Sold for 2 point whatever billion. And he said that he told employees, people that made a lot of money from this transaction, to collar it off. This is pretty crazy.
Right.
Hedge it off and stuff like that. And he's talked about it too, where he obviously everything that he owned in the stock basically went to nothing, but the hedge is like more than made up for it.
Yeah, and this is the problem. I can't remember what I was reading, and it was talking about having to do that for people. What book was it? Designing things for that purpose.
So what
for
do you
internet founders who wanted to get out of things, and then you give them your contract and everything, like what you agreed to, and exactly what the terms were and what you can and can't do. And then they try to design a way for you to hedge without violating the terms of any of that stuff. I mean, even in cases where you can't hedge your own stock through some sort of derivative, there might be other things that you could do that could have a similar effect.
Like what?
Well, using hedges of things that seem correlated to it.
Uh-huh.
So if you know that
Go in
you're
the market
an
and just
eyeballs-based internet company that doesn't have any real profit or anything like that, you could find others that you could then be short in some way to make money off of it, and then you could do things that are more complicated than that.
Yeah, so
maybe it could be in other countries and things like that too.
I believe they should. I mean, what's interesting is he was really the first to the streaming game. So they were doing like college basketball games, or just sports in general, and then earnings conference calls, and so this was before YouTube and stuff like that too. So they were kind of like the first to do it, but I believe Yahoo ended up shutting it down. Like, it wasn't a successful acquisition for them. It's so fascinating to me because it actually, if you look at like on Sharks, and this is no digs at Mark Cuban, he does a lot for Dallas. I'm a Mark Cuban fan. I just want to give that out there. Like Mr. Wonderful, for example. Have you read about his background?
No.
I mean, so
I've never seen this show.
A company that's
really? Yeah, no.
It's a good show. I think you'd like it.
Okay.
Yeah. They're little micro caps. They're nano caps out there.
All right.
He sold his company to Mattel, and I believe that they ended up again closing that down like 2 or 3 years later. There was like fraud allegations, and it got voted like one of the worst acquisitions ever. It's definitely up there.
To be fair to people, I do want to point out that if it's one of the worst acquisitions ever from the side acquiring, then it may have been a very good side from yours. That doesn't mean the business was good. So maybe it means that you're not very good at doing business. Yeah, but it should mean you're pretty good at selling.
I can't remember the exact details. I don't want to like say it if I'm wrong, especially with fraud allegations. But I thought it was like channel stuff. There's some weird stuff. Google it. I haven't read it in a while. But I did find that interesting.
Fair, channel stuffing, that could be either way. It could be the seller was doing it or the acquirer was insisting on it.
Correct.
So
I don't know. I just thought I found that interesting when you look at, like Cuban with his company. But I mean, he's very successful, obviously. So, and it was the product of the times too, right? I mean,
what was a smart thing to do then?
Of course it was. I think, and he deliberately collared off his position. I mean, hey, if you could sell your business that's burning $11.5 million for $2.5 billion, wouldn't do that. That
was one of the biggest regrets of Malone and of Turner. Both Ted Turner and John Malone, that they, took stock in an organization that they couldn't control.
That's right.
And they either were actually banned from or felt they couldn't sell stock and things like that. Yeah.
What do you think that would be like, not working for the company that you started? That'd be odd.
Yeah. Well, I've read lots of books now, so I know of lots of odd situations. Yeah. I like reading about the ones where the people keep coming in to work and they have no position there and they have a secretary and everything and they can't actually do anything. But yeah, there's some awkward ones. I'm reading the book on Olympus, which is a scandal in Japan. I don't know if you remember that one. So that one has a lot of that awkwardness in it.
Oh, really?
Yeah.
Yeah, but making $1 billion probably help you get over that very quickly. He actually said that one time on a Shark Tank episode. I think someone was about to sell their business and they were having second thoughts about it, understandably. And Mark was like, when I sold my business for $2 point whatever billion. I was sad for about 10 seconds.
Yeah. Now, interestingly, on an internet one, I know someone else who was offered a lot of shares in a company that was about to probably go under, and they were trying to save a lot of money. And so they're getting rid of some top people. And I think he was running HR for them at the time. And they said, we can pay you in cash this amount, or we can give you like all these shares, which would have the same value in cash basically at the time. It was actually options, but same sort of effect. So he took the cash. And I've seen the company because it's still public to this day, and he would have become an incredibly rich person just because they when they were slashing all of corporate and then survived, happened to be this incredibly low stock price on it. But it was a high flying stock that dropped almost all the way down. Oof. And then if those people who had been forced out had just taken options that they would have gotten instead, then, they weirdly, the people that, in essence, the people who they felt they should fire would have come out ahead with a lot of money because of when they had to do it, right? They were firing people because they needed to keep the lights on.
Mm-hmm. So what do you do then? I mean, so like GameStop, right? And this is what I want to bring up, and it's the top story. GameStop CEO George Sherman is stepping down, sending the stock soaring. I mean, so that means after a certain point, he's going to be able to sell a stock.
Well, that was a strategy in the .com thing. It was to create lists of stocks that with the dates of when the lockups were coming off, so the insiders could get out, or other major shareholders like VC type stuff. And so not to actually short those stocks because that would be dangerous, but to specifically bet on them declining in price over short periods of time around the time when they could get out.
Yeah, I mean, Coinbase went public last week, and a lot of people were complaining because the CEO sold $200 million worth of stock or $300 million worth of stock on the first day. It's like 2% of his whole holdings. I'm like, I think that's probably prudent wealth management for him.
And that's what they always say. I'm doing this because it's prudent because I have to diversify my holdings. Yeah, because I've been advised to do that. Yeah, which makes sense. But on the other hand, they don't mention that. Oh, I have if you sell a few percent of something, 1% of something, or whatever. If you lose everything, you're still gonna have a few $1 million left over. It won't change. I mean, it'll change your lifestyle. You won't be a 100 millionaire. You'll be a millionaire. But it doesn't take much to sell that you could have 99% of your net worth in something, and that be prudent for someone who's has that kind of wealth. It's different than advising someone that your average person. I don't think they need the same diversification advice. Yeah. They still would be left with millions of dollars if they went 99-1.
Yeah. You lose 50%, you still got 100 million. You're okay. I mean, Bill Ackman. I was gonna say Bill Ackman once said, because a lot of people in our industry, they're always talking like, oh, you should be the largest investor in your fund and blah, 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 or have all your net worth tied up in the fund. Everyone has different opinions on it. Bill Ackman, I remember he said once that he doesn't think you should have 100% of your net worth in your fund, but you should probably be the largest investor or have a significant portion of your net worth invested in your fund. And he said that he thinks it'll allow you to actually act more rationally.
It might be true. I mean, I don't think it actually makes much of a difference as much as people think, because the capitalized value of your income on a hedge fund percentage like he's getting is so huge compared to how much you'd have in the fund generally, unless you've been in for a very long time and unless you're close to investors, that it just doesn't make sense. So, I mean, you still have that same, he might be too willing to take risks, or however you want to put it, because he'd be able to get so much money off of that, right? So let's say, if he's getting 20% of profits and they're making $100 million a year, he's making $20 million. If he feels he can keep his fund doing that and all of that, then that's the same as having a stake that's over $200 million. You might not be able to sell it to someone for that, but like the capitalized amount of it is so huge. Yeah. That's why I always, when you have those ones where people say isn't it great the CEO owns 5 times his salary? It's okay. But I mean, that's really good. But when you're talking about, founders, people who could be in there for a long time and everything, the actual value of their salary, the capitalized value, would be significantly higher than the value of the stock, So I don't think it's necessarily a problem to own some stock, but it's very different than someone who owns a lot and that's tied up to it. I just think with the hedge fund things and stuff, like he's associated with it. It's a huge part of his income, his reputation associated with it. I think there's all these other incentives. I think there's all these other incentives of why he might manage it too aggressively or too conservatively that have to do with things like that he's kind of a public figure and reputation risks and all that kind of stuff, more so than just maximizing wealth about him having stuff in other assets. Yeah, that'd be my feeling.
He was an early investor in a company in South Korea that recently went public, and he donated 100% of his shares to charity. I was surprised that I didn't hear more people talking about it. It's like 1.6 billion.
Oh,
I mean, that's got to be, that's huge. He just did that a couple weeks ago. So more on the times right now. DogeCoin is at 35 cents. So this cryptocurrency that really started as a meme, as a joke, is at 35 cents. Are we going to look back one day and just say, what was going on? Of course, things were going to crack or people were going to get hurt. I mean, isn't this crazy? Everything that's going on.
Yeah.
Is it surprising?
I mean, yeah, the individual things that are happening are surprising, but
like persona is really taking over. People, I think anyone investing in DogeCoin, they don't think it's going to become the next Bitcoin. It's just to be part of the fun.
Yeah. There's what is the book that I was going to recommend to you that might help with this kind of thing? Devil of Our Own Design, I think that's what it's called. It's mostly about risk management in Wall Street firms and things like that, trading desks and things like that. But it does discuss some things about bubbles, how they could form simulations of why bubbles would happen. And just if people who are doing something that doesn't make much sense start to make more money, you could have a bubble, is the theory behind one of the simulations. Because they would end up with more money, the other people would end up with less money. People with less money wouldn't be willing to participate in the market. The people who are making more money would keep making bets on the things that was making them the money in the first place. And so you could have it replicating, in a sense, strategies that are bad, but doing it, just copying the short-term thing that was working for a while, and it could make something look like a bubble happening. So it could. That could definitely happen.
Yeah, it's crazy right now.
I find it more interesting that it's covered by everyone else.
It's because it gets the clicks, gets the views.
I guess so, but like, how did it happen in the beginning that way?
If you and I did 7 podcasts a week about Bitcoin, Dogecoin, Tesla, everything like that, the podcast would be 10 times bigger.
Yeah.
Like Munger says, only the cultists come here.
Yeah, I try to not even read things and stuff about the blockchain stuff because I've had to for certain things. You know, we talked about title insurance stuff, so I looked into that because it does seem like a logical thing. Not the currencies we're talking about, but use of the blockchain for something like the technology for in place of something like that. Although I'm not sure. The thing with all of that confuses me is in many cases I don't understand the applications.
Yeah,
because like it's usually use a trusted intermediary for most of the things they're talking about, and it's kind of not a problem.
Well, that's what they're trying to take away, correct?
Which makes sense, but only maybe 2% of GDP is like truly hardcore illegal activity, right? So you take that part of it. I mean, how much tax evasion and stuff can there be? That can't be that big in a country like the United States. We're adding up to only a few percent. I mean, the amount of the currency that you would need and stuff for things like that, for stuff that wouldn't trust banks and institutions like that, seems odd. Because like if you don't trust somebody, you just get someone else in between. There's different ways of doing this, whether it's doing it by posting collateral, by doing escrow, by doing letters of credit and things like that. I mean, there's just a lot of, you can do business with someone that you don't trust through different ways where you'll feel protected by institutions that will live up to their reputation. And so you'll be safe in those kinds of situations. And people have been doing that for basically ever.
I was talking to somebody this past weekend about NFTs.
Okay.
And it was like 2 sentences. And I'm like, all right, here you are. You're already using the buzzwords. Please. Like a 5-year-old. No buzzwords. You start talking and now I don't even think you understand. Now I don't even think you understand what you're talking about.
I don't know how to talk about many of these things without the sort of narrative of whatever's being talked about what it is and why you would use it, right? So that's the part that I find difficult is like trying to really figure out, okay, so what are these? When people talk about cryptocurrencies and stuff, there's other issues with the cryptocurrencies that are kind of complicated. I don't understand some stuff about how some of it is.
The Fed calls them crypto assets because they're not really a currency.
Exactly. So they're not currency. So that's one of the interesting parts about it is it doesn't seem to me from reading some literal language and some stuff that's exactly currency. Or it seems like it's similar to certain banking things that used to happen in like the 1800s. But the problem would be if people start to believe that some how to put this, some institutions don't really have sufficient backing in true currency, or what they're backing is not truly currency. Let's put it that way. They have currency in the sense of like dollars, or when I'm saying currency, I mean dollars, euros, yen, things like that. But if they don't, then how do you smoothly move back and forth between those things? So that's another part of it I don't get.
Yeah, well, if people want Bitcoin to be a currency,
like we can see the Fed's balance sheet.
The 10% moves have to stop. Could you imagine if the US dollar was like that? Moving, dropping 10% in a day up.
Well, it's certainly not currency. Yeah.
But yeah, that's what people are going for.
No, yeah.
Crypto assets.
But definitions of what currency is, I don't know that I would agree with the Fed in their determination of what currency is. The Fed just changed its definition of currency, and one just changed its years.
Yeah, the person who was talking about NFTs was talking about having like blank canvases in your house that you just like put these things up on, apparently.
Yeah. I think that's like Amazon Fire does that. Yeah. And things like that, right? They just rotate different stuff so you don't own it. Well, but you don't own it. That of course I don't understand, because I don't, that puts in questions of ownership stuff, right? I don't know what ownership means if you can't deny use to other people, right? Mm-hmm. It's not clear to me. But I don't know. It's sort of like the SPAC thing. Everyone assumes that SPACs aren't IPOs, but I'm not sure that that's been legally settled. Mm-hmm. Every article I read about SPACs always says that they have more relaxed rules and stuff, are more permissive of making projections than IPOs. But I don't know, people who are listening to this know better if there have been court cases that have actually involved the definition of IPO and going public and what that safe harbor means, because I'm not sure it's different. But we'll see if it is or not. Mm-hmm.
So somebody actually sent in a question about tobacco stocks, and I thought it was incredibly timely because in the Wall Street Journal yesterday, news came out that the Biden administration is considering a rule to cut nicotine in cigarettes.
Make them to less reduce nicotine to below the threshold that should be addictive, or they could. They also, I'm talking about the menthol thing.
Yeah,
the flavor thing. Yeah.
Somebody sent in a DM. Hi, Andrew. Great podcast. Do you mind if I ask a question? ? Mm-hmm. A while back, Jeff was briefly negative on tobacco stocks, but didn't really elaborate on why he was pessimistic towards them. Optically, they are cheap and having strong cash flows, etc. Notably, growth isn't that great, but hasn't been too shabby either. Would you mind elaborating or maybe going into a bit more depth on the podcast?
Yeah, sure.
So we could talk about Philip Morris, MO, British Tobacco Company, I believe is that what it is. So what are your thoughts on, and I just thought it was timely because the Biden administration came out and said that they're thinking about disrupting the tobacco industry.
Yeah.
Does that mean alcohol is next?
No. People are very pro alcohol and marijuana and very anti tobacco, and yeah.
Mm-hmm. Well, it's not actually nicotine that kills people.
No, the important thing is nicotine is the addictive part of it. Sure. Yes. So the reason why people cigarettes is obviously that you're inhaling into your lungs and that it has chemicals and things like that. But that's the damaging part of it. But the nicotine is the addictive part of it. So it'd be like requiring decaf coffee. Mm-hmm. Now that wouldn't eliminate coffee usage, and it won't eliminate cigarette usage. There's already plenty of other ways of getting nicotine, and people don't adopt it. And I know lots of people who've tried to get off of cigarettes by using other products that are much, much safer. Now, part of the reason for that is government stuff that kind of, I think, blurs the lines by putting all tobacco things kind of similarly. And I don't know. I think that's something that big cigarette manufacturers are probably kind of in favor, and and also that people who are anti-tobacco are also in favor. So you have this weird thing where a lot of the regulations and stuff that you have about language on things is probably a combination of it benefits Philip Morris, they feel. And it also seems to be anti-tobacco. So you can pass a lot of stuff that Philip Morris likes that also seems to be against tobacco stuff. So for instance, like, pushing, like not making it sound like smokeless things and stuff are a lot safer than cigarettes. Cigarettes are substantially more dangerous than other ways of getting nicotine. But there's some confusion on that because of warning labels the government puts on packaging and stuff, which are true, that it's not completely safe, but it would kind of be like saying a vaccine is not completely effective.
Sure.
We want to put that out there. Like, that's not saying don't do it.
Yeah.
And it's not saying you shouldn't switch from using it to something else. So, I mean, my feelings are like on the tobacco stuff, I guess maybe be careful with tobacco companies that are smaller, because whatever's created will probably be created between Philip Morris and people in the government. Like, their lobbying power and stuff is very substantial. And so I would imagine that that whatever rules happen and stuff gets drafted in different countries around the world will be things that benefit them, which could be whether it's stuff on heat not burn things or whatever, and more harmful to smaller companies that might not have those abilities to invest a lot in different things or might own more of other tobacco products.
I mean, if they're going to limit the nicotine or bring it down to less addictive levels, what does that do to e-cigarettes and Juul and everything like that?
Oh, well, I don't know that those are, going to be significant. They did a pretty good job of making that not happen, the government and other people. So
what do you mean?
Of not having widespread adoption of things like e-cigarettes and stuff. I don't think we'll see much of any of that in the future in the U.S.
So any thoughts on the tobacco industry in general? It's very cheap, potentially.
Yeah, and some are a lot cheaper than others. I've looked at some of them before just because I was kind of interested in some people involved in them and stuff. But it's not something that I think I would invest in. They're generally pretty heavily levered. And they are in a business that, isn't growing volume over time and all that, and is very susceptible to regulation. And the societal shift is so big in terms of people being willing to have a lot of regulation of it that you have a problem that way. Like I was saying, you've had a big shift in positive feelings about marijuana and to some extent alcohol over time, and definitely a negative shift towards tobacco. It's such a small group of people who smoke versus the general population, everything that if you're going to do it, you do it on the basis of lobbying power. I mean, that's what it matters. So you got to figure out who do you think has the ability to have things drafted the way they want and who's at risk in different things, because they'll, entire groups of companies that focus on certain things could be much more at risk, depending on how stuff's created, because whatever will be passed in these different things from the government will be whatever is sort of acceptable enough to some groups in the industry, to some businesses, that also is very anti-tobacco, right? So it's got to be a big anti-tobacco bill, but it's specifically designed in such a way that it's not so harmful to whoever has the biggest market share and things like that. So any regulation tends to be sort of anti-competitive that way in an industry like this. So it probably pushes down competition and probably benefits those companies who most can decide how legislation gets written.
I mean, look at the gross profits on this company, British American Tobacco, 83%. I mean, that's just insane. Crazy. And of course, the big companies came out and immediately said that, you're going to hurt all the farmers and all the people that are in the tobacco business,
right,
which obviously is true.
Yeah. So, I mean, the tobacco, that's a big deal. So a lot of it's obviously grown for cigarettes. You also have actually some is grown for marijuana. People remove the inside product and use the outer wrapper. So that's also that's grown in the U.S. Tobacco farmers in the U.S. There's tobacco farmed in other countries too, but I'd say that's the two biggest uses. It depends on the state, but in some states it's huge. Yeah, and I know. So that is a question whether you would be able to keep, government stuff. Whether you would actually be able to get votes from certain people in certain states. That would be hard. If you're in North Carolina or Virginia or wherever. And there's tobacco grown in other places, Pennsylvania, Connecticut, and places like that. But yeah, it would be complex,
Mm-hmm.
and there would be complex from different legal things too. But it's just I mean, if you look at the prices of the stocks, I don't find them that attractive. I mean, we could go look at Philip Morris at Altria. At Altria, not Philip Morris. We don't, because this will be the one that's affected domestically.
Mm-hmm. Yeah, because Philip Morris does not in the United States.
Yeah. So 5.5 times sales, and you have operating margins, that look like your payment processor or something.
Yeah.
Yeah.
I was saying the profile.
Well,
of
there's
the
no competition in the industry because you banned advertising basically. So whoever already had shelf space then gained at that time. It kind of froze in time, whoever the leaders were that way. Then we could get into the litigation stuff, but you can read about in the 10Ks the different companies, because the way that the agreements worked with the attorneys generals and stuff, it's kind of difficult. It's based on market share stuff from back then. It pays a big dividend, so people like that part of it. There are other ones too. Vector which I think is Liggett, pays a good dividend. And is also involved in other things like real estate and stuff like that. And is run sort of like a private equity type thing that way. So, but you are paying normal type levels to free cash flow. And now they're saying that they're going to make the product not addictive.
Yeah.
Which is interesting. And then
but they're not going to limit the amount of cigarettes in a carton. So now I'm just going to have
also very, and of course, do state governments like this? Because if you succeed in making it not addictive, then that's obviously extremely bad for revenue.
That just means you're just going to smoke three at the same time.
But like a lot of governments now, it's a positive for them, the amount of smoking going on in their state because of how much money you're getting in taxes, right? This isn't like some things we talk about where there's taxes against something, but it's such a small portion of the economy that it doesn't matter. This is big enough that it's a heavily taxed area. So, it's meaningful. It's kind of like, if gasoline use goes away, then your gasoline tax doesn't accomplish anything.
Yeah. So
you got to find some other way to fund road stuff. Same thing here. For some states, it would be a big deal, right?
Mm-hmm.
So I don't know if they'll be for it,
Interesting. Let's talk about Chevron Corporation. We have a question that says, any thoughts on Buffett's recent purchase of CVX? I'm guessing that at 1.5 times price to book, he is calling it a bottom in oil or a general inflation play, given the company's leverage to oil prices and how bad most of the metrics have been for the last 3 to 5 years. Wonder if there is also thought of a Chevron and Exxon merger, which has reportedly been discussed. Per QuickFS, you need to go back to 2013 to find a point when the company looked respectable, and also guessing, given the industry, this was one of Buffett's calls. Not trying to turn this into a climate issue, as I feel that the fossil fuels is overplayed by the media, but basically asking about Chevron's or Buffett's purchase in Chevron. Any thoughts on that?
Right. No, I don't have a view on that. Buffett's invested in oil companies before. Sometimes I've been surprised by that. But he needs very big investments, so it makes sense.
Large company.
Very big companies. So Exxon, Chevron, those are some of the only companies that fit in that category of being big enough and being cheap, right? There's very, very few cheap stocks. I have no view on oil, and it's hard for me to come up with a view in the long run on it because obviously it's significant in terms of use by cars right now. And if that goes away, it's hard to make predictions about electricity over time and everything. So if you actually go by what people are predicting and what people are saying they will have made and everything in terms of electric cars, that makes a big difference to oil over time. But it's hard to say what difference it makes because it also makes huge differences to electricity and things like that.
Mm-hmm.
And then also before that happens, you'd have differences, you'd have changes already in exploration activity and all of that. So it's too complicated for me. I mean, you have the lowest cost producers and stuff are literally a cartel that you have that can control prices that way. You have a lot of government involvement in sponsoring things that might reduce the demand for it. But then you also have offsetting things about where do you get the energy that you need for other things. And you already have a lot of infrastructure in place that'd be used for something. So it's very complicated and I don't know the answer to it. It's way too hard for me to figure out an oil company. And what do you think about an oil company? How would you figure it out?
Same way, same camp. 10-foot hurdle.
I mentioned an oil company before. I mentioned that there was an oil company that I looked at and the warrants and all that. But that is over a fairly short period of time.
Mm-hmm.
We're talking way before 2030 that all that production will be turned into cash. So,
yeah, that's not a 2-foot hurdle, I would say. This was a good question. I think a lot of people would be interested in this because a lot of people like process-oriented questions and stuff. You said if Jeff were to hire an analyst, what would the analyst's average day look like? So if you had to map it out.
Well, here's the problem. I wouldn't hire an analyst to do what I do.
I know. Well, I'm saying hypothetical. Oh, true.
No. So that's what I mean. So the answer I give you won't be an answer of what I do. No, I would have a list of stuff of questions that I want to answer by, whether it's contacting people or gathering certain sources and things like that. I usually have a pretty good idea of exactly what information I need, and then an idea of where that information might be, and then it's just a question of ferreting out that information.
Mm-hmm.
So that's what it would really be, which unfortunately is not what people are hoping for with like a financial analyst. What it would be is scuttlebutt type stuff is what we're really talking about. Because I don't need anything on public filings of things, but I always have a list of questions that I need answered or want answered or are curious about. And sometimes you can't find out those, you just have an idea of where those sources might be, that they could exist. I mean, you've tracked down things before about like what company someone used to work for and are there stuff that they have information and then you found it, that kind of thing.
Like articles on different valuations, things like that.
Sure. So like if you know information about something, then tracking it down. I was talking with someone about an insurance thing and stuff. And so it was like tracking down actually stuff about, well, what really like, trying to get an idea of what's really the policy things that you would see. So an analyst might be going and filling stuff out to get a quote, acting like a customer for things like that. It could be going and finding information about actual like disputes. So like what legal things were there, a dispute between the insurer and other people about stuff. And from that, you could gather what they're really doing, right? Mm-hmm. So little things like that. Like I have a ton of questions, and then it's a question of like finding out that those things through scuttlebutt, I would say.
Then what about yourself?
Well, myself, it does a lot more of reading of 10Ks and things. Buffett's talked about this, where he's like, well, I used to do a ton of scuttlebutt and everything, and now I realize how much, like now that I've done so much of that, I can get so much out of things like the public filings,
Mm-hmm.
And so I would say a lot of my time is more of that initial stuff. That's probably not the best way to spend it. It would be better if I spent more time on going deeper on a few ideas.
So is it just looking for the ideas where you can go deep on them?
Yeah.
I always say in a perfect world, I wish, so it's like if you run a screen or you're sifting through ideas or whatever, I wish I had a list of, 20 names where I'm like, all right, these are something that you could really be interested in.
Right. That's the problem.
Yeah.
No, the problem is the
and every
lack
investor
of
knows
those.
of that, right?
Yeah. But that's the problem is that the lack of those that you want to go further on. And I mentioned that usually there's something that's interesting enough. So I would probably, if I had an analyst, he would probably hunt down more things I was unsure of, but there was something very interesting about it, right? So it could be something like, I don't understand this or I don't like something about this, but it looks really, really cheap, right? So I mentioned like the warrants in some oil company, right? It's like I just did the math and said, wow, that looks cheap, that oil company. But I don't know enough about oil and stuff. But I look and I go, well, it's probably pretty simple. So then get some answers on this, Or I like this company. This happens sometimes. I like this company. I like everything I'm reading and I think I understand about it, but I don't know if I like management. I can't find anything out about management. And, maybe it's something where that's really important. Or there's really good numbers at this bank and everything. It's growing fast and it's posting all of these good numbers and all that. But can they really create this many loans and be doing all of this and have a way of doing that where they're also have a handle on everything?
Mm-hmm.
And that's the kind of scuttlebutt that you could probably figure out. Instead, what I have to do in this case is kind of guess, find out judgments on things, and then pass on stuff that could be interesting, but that has some sort of potential red flag. It isn't even actually a red flag. It's just I can't disprove that there could be something extremely high risk here, right? And sometimes with scuttlebutt, you can resolve that.
Mm-hmm.
There are some companies where it's like, if I just could visit the place, if I could talk to the management, that would resolve it. Now, most companies, there's not. Like a Chevron doesn't help you. You can talk to management all you want. That's not the key problem.
You're not going to even get to management to be investor relations.
But Chevron Chevron Altria, they could sit down for you, and that would be a big deal, right? If they sat down with you and talked with you for half a day. But the truth is, it's useless, because that's kind of the information you already have with these giant companies that way. But for something like a small bank or something, then it could be really important to talk with management if I feel like I think I understand it, but I'm not sure. And then things get explained, and I'm like, then I do understand it.
Even things that aren't in the annual reports or the filings, like the culture at the bank, stuff like that.
Right.
It's smaller
so
companies.
If your main concern is something like, it's very specific that way, right? So it's like, I'm concerned about loan quality in this category because they've made so many loans in these years or whatever. And then you get more feel of what was going on there. And it also could be, we bought a bunch of loans from some bank that we know in those years because we had to, do that. Then you'd be like, I'm worried, but those sorts of things are pretty easy to figure out. And instead I'm going by guesses, from the 10Ks and things. So like I said, when someone asked me about a particular bank, I looked into it and everything, and I'm just highlighting these words. Okay, they're participating in these loans and all of this stuff. Here's how it's getting sourced and whatever from my guesses from what they're saying. Here's how quickly it was growing. Here's how much in these years. It's like, could they be doing this right? Maybe, but they're kind of, if so, what they're managing in an orderly way is way more difficult than any other banks that I'm looking at in terms of how fast they're growing and how much new stuff they're doing all the time. But that's like scuttlebutt things. I mean, that's probably stuff that you could ask around and you could get a really good idea if these people are crazy or not, because sometimes the talk would be these people are crazy.
Yeah.
And Wall Street might not know that all the time, but people in the area, you can see what cities that they're doing lending in and stuff might be like, oh yeah, they have a reputation for being insane.
Yeah.
Yeah. Or, and there's lots of, or whether people are honest or something. I mean, there's plenty of things especially microcap things, you find that. So we said one time that we visited real estate things and stuff, I wanted to see specific land that there was, because this company was selling an absurd valuation relative to the land. Just book value, and then the land was probably maybe even worth more than that. But it was controlled company, and management, could be, any sort of thing that you don't like about management stuff. There's no indications I would like management or what they were doing or anything. But it could be resolved very easily if it happened that you could talk to management and management seemed actually reasonable. I mean, as long as it seemed anything other than totally unreasonable and not caring at all about shareholder value and stuff, then you would say, okay, I'll buy that.
Yeah.
I see that all the time to people with Japanese things where I say, I'm sorry, I have to pass, because the problem is I need certain information of such a detailed nature on stuff like financials. I basically can't invest in Japanese financials because even though if they put it all in English for me, even if someone translated it all for me, I actually can't get across the specific things that I need to understand. And so there was stuff that was like, well, the accounting's a little different, the regulation's a little different, and things like that. And so when I'm looking at it, if you change the insurance regulations, if you change the accounting, and if it's in Japanese and I'm getting secondhand in English, then I can't really understand something fundamental about what they're doing, and I'll misinterpret it, right? And so that's the kind of thing that can be figured out, kind of like an investigative reporter thing. So if I had an analyst, that's what it would be, is that sort of thing about here's very specific things you need to figure out. Because I'll be like, in that case, it was like this loss ratio is way too low. So how are they writing premiums this expensive and losing this little? Is something not here, here are my guesses. Is something not included in here differently than in the US? Is there some reason why in this industry you price that high and it's not competitive in that way? It's these are things that on the ground could probably be figured out, but are really hard to do otherwise. So I more just go on a bunch of, you've seen 10Ks and things I have, circling a bunch of stuff this is an anomaly. What is this? What are my guesses of what this might be? Why is it so strange, right? Why is this thing off the charts one way or another? And it can be good things, why is it off the charts that this business is so efficient? Why is it off the charts that, how can their expenses be this low?
And that's a good way to learn about a business too, by the way. Right, then you go and investigate, and it could be a great thing. Yeah, and
you go and investigate. And sometimes you investigate, and it's because the people are running it, right? Sometimes you can figure that out. Or you can see it and be like, oh, I believe it, But for the example, for the real estate thing, right? we saw something, we're like, oh yeah, I could believe that was X million in CapEx. Cause like, wow.
Yeah, it's nice.
And I mean, irrational, but nice.
Yeah.
So that was the question. It's like, then you need to talk to management because
it's like things
are in great shape and whatever, but there's no logic to how the capital allocation is happening.
Personal country club, Jeff.
Yeah. So, yeah. So, you have all those, in each case is different, right?
Yeah.
Where sometimes you can analyze a business from the outside and feel like you understand it fairly well and you don't need that additional information. Although a huge part of that is background you can bring from the industry. And you don't realize how much you're doing of that comparing it to things. Like what I was saying with the insurer thing is I'm like benchmarking to other things I've looked at. So I'm like, look, these loss things are lower than some warranty companies and stuff have for like, like there's Front Door and there's Home Serve and stuff that do these in the, they, you add on to your appliances and things, the cost of labor basically to be insured on your bills. And people have probably seen ones like that. What's it called? American Home...
that was a spinoff, right?
Yeah, but what did they sell under? Like, what would people know
American
is the actual
Home Shield? Is it Home Shield? Something like that.
Yeah. Okay. So anyway, there's one in the UK that's similar, and that one would be the one people are most familiar with. You can look up Front Door. FTDR. Type that in, and we'll see what I mean.
I thought it was American Home Shield.
Anyway, there's certain reasons why you could have a fairly low loss ratio in this.
Yeah, American Home Shield.
American Home Shield in this business, because I thought you could have certain things that would lower your costs even. Right? Because you could utilize someone, you could insure someone to get more of their time spent fixing things than otherwise. And so in a sense, you could have lower costs. So the actual numbers reported to me are lower. So it's a special example. Usually insurers don't really have much lower costs. So it's mostly a matter of how high you're pricing your premiums versus your loss. In some industries, there can be anyway that their losses are lower. But so like I was looking at something where I'm like, this is even lower than that. So they're pricing it really high. So I don't know. So you compare it to different things is what I mean. And maybe other people wouldn't have all these comparisons to draw. Because so like if I'm looking at one thing, I'm looking at, okay, well, here are these 4 or 5 other insurers and what would their levels be? And so how reasonable is that?
That's learning in general though, right? The more you learn, the more it's easy to pick up on other things because your brain just works on like that framework and you're pulling ideas from something that you are familiar with or reminds you of this situation.
Right. So if you had an analyst, in a sense, the analyst doesn't need to know all that. They
just
can
answer the question.
Know, I don't understand how the loss ratio can be this low. Go around and like ask people, how can the loss ratio be this low? Why is that? Just, I'm confused. Why is the, just like an investigative reporter is, you act like, oh, please enlighten me. You're a genius and I'm stupid about this and stuff. And they'll start talking and the information will come out, you know? People are often happy to explain sorts of things about the business and whatever. And you can, then when you bring that information, you can really have stuff that's helpful in understanding the business. So that's true a lot of times. Like a lot of times a stock looks interesting, or looks cheap, but then there's this question that I need answered that's hard to answer. And it has been hard for a lot of other people too sometimes. So like there's some stocks where everyone is kind of thinking the same thing. Like I can't just get the answer to this, and so you have to go through other things to try to figure it out. I mentioned, and then you have to make guesses on that. And sometimes you read enough stuff that you think you can make the guess. So like I mentioned, I bought George Risk as a net, and I thought I could make the guess that they had some pricing power there, that if volumes declined a lot, they wouldn't have to, they'd be able to up their prices a little bit to get their gross margins more in line. And
what went into that guess?
I read a few things. I read an interview thing and some other stuff, but the key thing was that their competitors were offshore and had really low costs compared to them, and yet they still had really big market share. So while they're a really low part of the business, the customers using. And so that just suggested there were other factors involved, that you couldn't win the business on price.
Do you think there's other signs as well? Like we talking, not to speak too much in, metaphors, I guess you could say, but like, let's say you had a movie theater that was just constantly packed and people were constantly complaining about it being busy.
Something's packed.
Like, does that tell you like there's some untapped pricing power there?
Yes. If you go someplace and they don't have enough product on the shelves or they're full all the time and stuff, then yeah, there's a pricing problem, Yeah. And there are things that you can...
Just subtle signs, right?
subtle signs that there's a shortage or something. A shortage or something. Yeah.
Or obvious.
Yeah. And that's stuff that, analysts can gather that information, I'm sure, if there were specific things that you're trying to figure out. But it's more like, it seems the things that happen are more like you think there's pricing power and you're like, but how is there pricing power? It's usually more like that. Like with the George Risk example, there were reasons why it looked like they had it, but then you're thinking, but there's a basic product that, how do you really have that? How does that work? Actually, if you remember the story Alice Schroeder told, it's not in the Snowball, but it's the story she tells about the tab card company. Yeah, actually, the tab card company thing is very similar in some ways to George Risk. So it does help to have that information. And I looked at some, I did some research on some things that was helpful in those, which is again, asking around. So it's a lot of asking around, but just asking people like, what would you buy more of this or what, like, what if they raise their prices? What would you do? That sounds like a stupid question.
Breeze Eastern.
I did it with lots of people. Did it with, I can remember
you wrote
big
about
answers
it
in 4 or 5 different companies. Yeah. What would you do? And it varies. Like some were like, well, I use the same amount of the product no matter what, because it's a small part and I'm not going to change whether I make the decision to produce X amount or not. This project's either going to happen or not. So they can charge me whatever they want. On the other hand, I'm not going to pay more for it than the others charge. Right. So, but anyway, but like that might not seem obvious, but if you have those conditions, pricing is a little better. What you don't want is a situation where if you lower your prices, people will actually buy more, because in a competitive industry that encourages everyone to lower their prices. But if you have something like Lime, where everyone knows, well, lowering our prices a lot doesn't really help us sell a lot more, then maybe we should all just not lower prices a lot, And so those kinds of things help. Whereas if their answer was, oh, I'd buy a whole lot more, you don't want to hear that, right? So, and you see that in the cycles, right? So like in the past, you would have seen in the financials, and then you'd want someone to analyze it. Like, okay, figure that out for me. Why am I seeing this in past cycles, And you've heard, like when I talk to some CEO or something, we ask about specific gear. They can help with that.
What happened? Yeah.
Like what happened? Like not just what happened, but like, well, what did that, how nervous were you in that year? What did that feel like and stuff?
Yeah.
And, like when were you at your most nervous? What year was the toughest? Why was it, at the time you wouldn't know the future. So what were you thinking then about what could happen and how bad it could get and everything? And that could give you some insight into like how the business works, at least.
And even how they think about their business too, risk and stuff like that. Yeah.
Yeah. So basically like business intelligence stuff that you could gather, I guess, but it really is driven around some specific questions. I don't think I would have anyone doing it where it's like a checklist of that, it's not general that way. It's like you found the mysteries, I guess, the leads. I guess you generate the leads and then someone could investigate those to a point would be helpful. That's the part that's always hard, is getting what information sources. That's the part that I have the trouble with. I know what information I would need to verify this or to make the decision to buy, right? But who has that information and how do I get it? That's hard. Sometimes that can be hard.
Yeah, because you could go to dead ends too.
You do.
For some things, a lot of things. Yeah.
Right. Yeah. So, and with microcap stuff, a lot of times they don't want to tell us about it. Like there's just not a lot of communication from the company or something. At bigger companies, it's the reverse. It's like there's a lot of information, but some of it isn't the information that you feel you need. But people keep referring you to the information that they have out there. And it's like, well, yeah, like they'll report a retention rate, right? And that's not the retention rate I want, because I can see how they're calculating. I want like some different information that I feel is important. And every write-up and stuff will repeat the same thing. That's what I worry about the investor presentations, right? When I say to people like, don't read investor presentations or whatever, it's just because wherever you found the idea, I think they probably read the investor presentation and then wrote up based in large part on it. Yeah, they use a lot of the same language, almost like the same metrics and
which
things
is
like
what
that.
The company wants to tell you.
I know it is interesting how effective it is.
It could be good. Depends
on
the
investor
situation.
presentations can be good. I just mean it does show you that a company can have influence on how it's perceived by the not just like whether it's perceived well or not, but frame, these are the issues we want you to think about. Well, of course. Look at these and don't look at others.
And now more than ever, there's a lot of CEOs I've seen on like Clubhouse, Twitter, they're going on podcasts, all sort of things like that, which I guess it's great if you want to communicate the story to the market. But, I guess it could kind of create that reflexivity thing.
Yeah. What's different about it is like, it's almost like you can present it as you would for politics or something, right? But the media focus on it is different. So it's much easier to get your own story out there and like what things you want covered, because you're much less likely to get serious investigation of how does this company really work and stuff until something happens. Like there's a short seller that puts out a report and then that draws a lot of attention to it or whatever. But normally people just report, here's what their earnings were, here's what analysts were looking at, that kind of thing. And they won't say, oh, and here are these people who think, but actually this isn't the way to think about the company or whatever. You don't get a both sides sort of thing. It's not that kind of combative thing. It's a lot easier to put your own spin on things. Yeah. Yeah. I was looking at some company that had very different multiples than others, peers. And I thought in large part it is how really good they are at communicating how they think they're creating value and basically doing the work for you of like, here's what we're worth and everything. That was interesting about that is...
Was that in their investor presentation?
The stock went way past what they said they were worth. So
we talk about that. So then what do you do that? Do you take that part out?
I don't
take
know.
that slide out. That says that we're worth like 30% lower than when the market's
at. Yeah, in their case, I don't know. Because they kind of... what's worse about that is they kind of laid out how you should calculate it.
Yeah.
Yeah.
Kind of shoot yourself in the foot doing that. You can.
Yeah, I guess. So Buffett's kind of said we wouldn't be buying the stock right now sometimes. So there are people who have said that, that were pretty expensive. Actually, there were some others that have said that before. Very small though. But I think the CEO of Bull America said that at one point. It's like that the stock, years and years ago. It's in some book about some guy who goes to different annual meetings. I forget which one. I thought it was Bull America. It could have been a different annual meeting. But he goes to one of the annual meetings and the CEO's was like, I just don't get why our stock's, this expensive, this little company or whatever, So it was one of those. I don't remember which one. But
sure it wasn't a New Jersey Deli?
No. Well, the key there is not communicating anything, right? Sometimes not saying anything. That's the one I like about some SPACs where now I've read things in real news things that say, like, basically, this company is expected to announce that it's going to merge with this company, according to generally market rumors. Basically, is what they're saying, that like the people are bidding this up on the expectation of this is the thing that's going to be, not sourcing who told them this. They're not saying according to sources that this is what's going to be announced.
Oh, it just got leaked.
Well, but there have been things where it's apparently wasn't true. So, because that there's people can look this up on the SEC stuff. There's like a history of the deal sort of thing, right? So background of any transaction that you have. So like a merger, things like that. Yeah. So you can eventually look these things up and see at what point they decided to do the deal, how much due diligence there was and all of that.
Who they talked to, who they went through for advice, stuff like that. Yeah.
What's interesting
what they valued it at.
Right. And so if you match those dates off and then Google stuff to see what was being reported, sometimes people were thinking that they might merge with this or that, which apparently they weren't thinking about. Otherwise, the lawyers would make them put that in there. So some of it is just complete speculation about what's going to happen,
That's currently going on with Bill Ackman's SPAC. Okay. There's a whole Reddit page on it.
Yeah.
Twitter, anytime he tweets, people always say, Bill, when are you coming out with your announcement? Bill, when are you doing? Watch, I'll show you right now. It's funny. Anytime he tweets. So he tweeted about he's having something about internet porn and something with the payments.
Right, yeah, he's
got a crusade against them. Let's see. The whole thing. Bill, if you merge Inspire Brands with Subway, I'm going to walk into every single franchise. And take a dump in the cash register. Okay. What else we got? Everyone's just basically harassing him. If you're looking on, I don't want to read them, harassing him about closing the deal and stuff.
Yeah. So this part I didn't expect of the way that the investing world would turn out. You asked, did I expect that there'd be things like Bitcoin and whatever stuff? Kind of, because of the .com thing, something like that was going to happen of just bizarre stuff. But this social stuff, I did not. You know, I mentioned before, right? Like, so, you know, the chairman now, I guess he is, of GameStop.
Mm-hmm.
I actually looked a lot into CHWY because I was analyzing PetSmart to do a thing on PetSmart.
Yeah.
Now, PetSmart was then taken private before I could publish that write-up. Or wait, PetSmart, did that come out? I don't know. So either that came out or that didn't.
Was that Ryan Cohen? Was that his name?
Yeah.
Yeah.
So we looked a lot into CHWY and like wondering how good it would be at growing and all that. And what's interesting is what the conclusion we came to was like, this is amazing. This entire thing's built up about social media. Like, this person is amazing at doing social media stuff. I'm not sure I understand it. I'm looking at stuff, I don't understand it, but just this amazing hype around it and stuff of CHWY. And that's what built the whole business and was a way of doing it instead of getting the equivalent of how otherwise you have to spend like Geico or Progressive spend on advertising, you could do through all of this social media and just the most impressive social media stuff I'd ever seen.
That's the push going forward. These people having their own brands and being able to monetize it differently and stuff like that.
Mm-hmm.
I do think you even look like with podcasting and actors and authors. And, you know, then they have like their Instagram page and they're able to sell merch and they're able just to control what they want to do. I feel like you're not having to go through agents as much and stuff like that anymore. I think that's the push going forward.
But what's interesting about
it's
that
the creative part.
Right. What's interesting about that is that that is now sort of affecting GameStop. Right. So you take it a step further.
Mm-hmm.
It's not just that social media stuff affected customer acquisition at CHWY. But now it's affecting GameStop as a stock. You know, that how a company is perceived online and whether it's creating enough buzz and stuff has an effect on its stock price.
I like the stock.
Yeah.
Do you know what that is?
What? No.
That was from when Roaring Kitty, the guy that owns a ton and was on Reddit and stuff, when he had the congressional hearing and he's just like, yeah, I like the stocks. And now it's become like a meme. Somebody tweeted it, which I thought was so funny. He's like, when I worked at a hedge fund and I had to say why I liked a stock, or I'd say the KPIs are this, I think it's going to be this, here's the blah, 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 here's this. And he's like, nowadays as a private investor, I like the stock. I thought that was funny.
Yeah. So
it's crazy.
That's the one that's the part of the GameStop thing that's fascinating to me is just that part about the chairman. Yeah. And about the history with CHWY and all that, which is incredibly, talk about an expensive stock, CHWY. Part owned by PetSmart.
So 20 times sales. Oh wow.
Has it come down a bit? So it's at, let's see, the market cap. Yeah, I think it used to be, I could have sworn the market cap was close to 45 billion at one point. So maybe it's declined somewhat.
Unless the data's not good there, I'm not sure.
Okay. Anyway, so the one that was fascinating to me about that is if you look, the companies like market cap and stuff, now it could eventually grow a lot outside the US and North America, right? That could be the expectation of the market. But what I found fascinating is like, because of doing that report on PetSmart, you know, the company's market cap at its top, if I was right, that it was a bit higher before. Yeah, there.
Mm-hmm.
So right there at that top part there, I guess is when I checked in with it. I think the market cap and the size of the total market for pet food in the US are about the same. So it wasn't being valued just at like, it was being valued at about 1 times the addressable market or whatever you call it. Except of course it could go into other countries, right? So I'm not saying it can't happen. This is one of those fascinating. This is the one I always, when people ask about like Tesla and things like that, CHWY is the one I compare it to because it has all this great stuff going for it and everything, but it is similar to Tesla in that this is a very low gross margin business. So when you have a high price to sales on it, that's the part that's really baffling to me about it, right? So 20%. And it's not like anyone's gross margin has been better than 20% over time in those. It's tough to have a high gross margin. And generally, like this model is a bit worse than in store usually for that. So maybe there's ways they can figure it out. But so 5 times sales, if you said that about MasterCard, Well, their gross margin is essentially 100% of their next sale.
Yeah.
But, pet food, your next sale, it's still about 80 cents on the dollar. Like the marginal contribution is still that you're getting 20 cents or something out of the dollar for it, because it's the most physical product you can imagine. It's the opposite of one of these asset light type things that way. Just in terms of generating actual profit from that. So if you look at sales, it looks, I guess you could say, okay, well, is that 5 times sales? But, I would look and say, well, it is at a really high price versus gross profit. Which
Zoom Plus. What about that one?
Yep,
Have you looked at it recently?
Yep. So bit different valuation, right?
Mm-hmm.
So what's their gross profit?
$493 million, but 30% gross margin.
Yeah. And they sell some other stuff. I should be fair to say that also about CHWY, is that some of the idea usually from all these businesses is that you'll add on other stuff, but it's usually not as frequently ordered, right? As pet food. Yeah. So it's at, let's see. Yeah, I don't know if that data is right and stuff, but if it is, then obviously it's a lot cheaper.
Look at that EBIT margin.
Gross profit basis. Yeah, I think that's their goal, though.
Yeah.
Is to basically without reporting earnings. But if you look at that, what that's saying is that the gross profit is 500 million versus market cap of 2.2 billion or something.
Mm-hmm.
Yeah, I don't know if that's that's using the OTC ticker, so I don't know if that's correct. Where does it trade normally? Germany.
Is that where it is?
I don't know what exchange it's on. Yeah,
I know it's overseas.
So what I'm saying is that the price to gross profit looks a lot lower.
Mm-hmm.
But on the other hand, what's the growth rate in CHWY recently? It's a lot higher than is at Zooplus, I believe. Yeah. So there's your revenue growth the last 2 years.
Mm-hmm.
Yeah. So at Zooplus was like 10 to 20% in the last few years.
Yeah, it was like 20%.
And here we're talking, 25%. Last year was only 11, right?
Oh yeah, the 10-year CAGR on revenue. But yeah, the last couple of years, it's
like
been declining.
Maybe 20% or something. But here we're talking about like
massively.
Yeah.
Got it. Cool. I don't even know what to title this podcast. What do I title these podcasts when we go on for like over an hour and talk about so many different topics?
Well, these are the freeform podcasts that we do, right?
Yeah.
So
timely, less SEO probably. Well, no, actually, perfect. DogeCoin, Bitcoin, Tesla. I'm just gonna go for all the clickbait stuff.
So why is
Biden administration banning tobacco? Not
nicotine.
Even true. He's looking to limit nicotine. We're going to say tobacco.
Well, they would have to take the nicotine out of the tobacco somehow. I don't know how you would do that exactly.
How long have we been going? Look at that, folks. Hour and 12 minutes. What do you think? I wonder the percentage of people that start at the beginning and are with us right now. From beginning to end.
Well, we probably have data on that. We don't have exact data on that, but well, I guess you would on certain things, yeah.
Mm-hmm.
But I think the problem is my knowledge of most of these topics is low. I don't understand what.
No, don't tell them that. That part doesn't matter.
Some of these, what of the things that you're talking about?
Bitcoin, DogeCoin, stuff like that.
Yeah. Of course.
That's
I understand. Yeah. Well, what I understand about Bitcoin, I don't want to talk about, which is that I have some doubts about how the market functions and stuff in terms of actually getting your money into U.S. currency and back and forth, right? So that one I have some concerns about. But as an asset, I don't understand it.
Crypto asset.
As an asset, I don't understand it. As a currency, to me, it looks like something that is what, banks did long before regulations, which doesn't necessarily mean that there's sufficient true currency on hand to be able to handle a run. Not just run, being able to smoothly move you in and out of that. But we'll see. I don't know how we'll figure out if that does happen. I guess there'll be a problem that some people will report on if it ever runs into issues.
Mm-hmm. Cool. Well, I want to thank everybody so much. If you were with us from the beginning and you're still listening to us, we love you. Thank you so much for all the support. Be sure to follow me on Twitter at Focus Compound. Email me, info@focuscompound.com. This is the podcast where we poll questions to answer what is on our listeners' minds. Be sure to go to focuscompound.com and sign up to get access to Geoff's investing write-ups. We do use QuickFS. If you do sign up for QuickFS, tell them you came from Focused Compounding. I want to thank everybody so much for the support. Hit that subscribe button. We'll see you in the next podcast.